Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. All right, folks, so welcome to an amazing show, another amazing show. We build great apartment communities, and of course, we improve how people live. I have another amazing guest. Her name is Amy Wan. I can't wait to get into this conversation. She is someone who has done a lot in the real estate space. She's an attorney. She's a techie. She's doing a lot of really cool things. So I'm going to invite everybody into this conversation right now by sharing with you her bio, her background, and then we're going to get into an exciting conversation with Amy, not only around technology and real estate, but where the two are going to intersect, especially with the innovation that's being forced right now with COVID-19. So Amy, welcome to the show.
Thank you so much for having me.
You're so welcome. Hey, so I am going to share with our audience your bio, okay, just so that they know who you are and have an idea of what your background is. So I'm going to start off by introducing you, Amy, with your bio. So Amy Wan is the founder and CEO of Bootstrap Legal, which we're going to talk about here, which automates real estate syndication legal documents. So she hosts the Law and Bling blockchain podcast and has authored the Bloomberg Law Practice Guide to ICOs and LexisNexis Private Equity Practice Guide. So we're going to talk about that too. I'm very interested in learning more about that. So Amy founded Legal Hackers LA, which programs around the intersection of law and technology, and was named one of 10 women to watch in the legal technology space by the American Bar Association Journal in 2014. And let's see, she won of 18 millennials changing legal tech by law.com in 2018. So Amy, you've been nominated for a lot of different things. You've won a lot of different awards, and you also were a finalist for the Corporate Counsel of the Year Award in 2015 by the LA Journal. Okay, you are on numerous boards. So I'm gonna talk a little bit about your experiences, not only on different boards and in different industries, but let me share something that I think is pretty interesting. Okay, pretty cool. So you've also worked in the international regulatory and trade policy at the U.S. Department of Commerce, and was a presidential management fellow at the U.S. Department of State and U.S. Department of Transportation. So you hold an LLM in public international law from the London School of Economics and political science. So you're a JD from the University of Southern California School of Law, and you also have a BA in biological sciences from the University of Southern California. I feel like, you know what I feel like right now after that introduction? I feel like, remember that show Rudy? Right at the end where everybody was like, Rudy. I almost feel like saying Amy. I feel like that's happening right now in the background. Hey, it's an honor to have you. Welcome to the show. I know you're doing a lot of cool things, and so we're going to talk about that right now. How are you?
I'm good. I'm very hot. We're having a heat wave in Southern California, but otherwise, I've been watching the stock market, the real estate industry, lots of things very volatile right now. So lots to talk about. Awesome.
So you have your water? Because we have the heat wave too. Okay.
Yep, definitely.
So, you get to see a lot of really neat things, right? You have a very unique perspective because you're putting together, private placements. And so you get to see things from a very unique lens. Not only deals that are happening, but also you're helping to structure them. You're providing counsel legally on them. So now in the real estate world, what are some pretty cool things that you're seeing, in today's market, especially with, the current market that we're in, COVID-19, right? Changing the way we do business forever. So what are your observations so far?
So it's really interesting. I think just generally in residential real estate, there's just been a huge dramatic shift, even in commercial, right? On one hand, they're saying, hey, these major metropolitan coastal cities, New York, SF, LA, people are fleeing them. There's no reason to be in them anymore. At the same time, you are just seeing crazy demand. There's not a lot of inventory. There's a lot of demand. Things are not lasting on the market very long, right? I think people are flocking to places where they can have a little bit more space. And I think now people are starting to get settled with this whole idea like, hey, we're going to be in this COVID situation for a while. Maybe it's time to make a move, right? When COVID had just hit, so, in the early days, February, March, April, there was definitely a lot of panic. I had syndicators come to me. They had something under contract, and people who had given them verbal commitments a couple weeks ago suddenly were backing out because they were a little bit afraid, right? I saw deals not closed. I saw escrows not close. I think now the people who are going to invest in COVID generally are kind of back in the market. I just talked to a real estate syndicator friend last week, and they said, people are texting me, when's your next deal? When's your next deal? Because they just haven't done a deal for the past couple months.
Right.
I think there's going to be a lot of interesting change in commercial, especially office space, right? Especially on the coastal cities where traditionally everyone's been in office, and San Francisco right now is leading the way in terms of remote work. But, I do think that once COVID is over, maybe we won't fully return back to work as normal, but I think there will be a definite shift back to working in an office environment because, there's certain things you get from being remote and certain things that you just, there's certain things you just can't do as well when everyone's working from home, like brainstorming sessions. It's harder.
So let's talk about that a little bit, right? Because I now when I engage with my colleagues, I was just on a phone with a friend of mine who's a big developer, and he develops all over the United States. Okay. Mm-hmm. And so now when we get together and we have conversations with our colleagues, everything is via Zoom, which, we've had to do that anyway, right? Because people are in different states, but now it's commonplace. And so do you think is that we can't brainstorm as better, or do people need to adapt stronger leadership skills to be able to learn how to convey a better message now through, a different medium, right? Because here's why I asked the question. I hear this, I hear this quite some time, or quite often now. And really it's it's kind of it's almost an argument between, argument between how messages now are going to be communicated, right? Either they're going to be communicated through a medium like Zoom, or what we were doing in the past, which was in person. Now, I think everybody prefers in-person meetings because they feel normal. We get a chance to see each other and interact, right? We're social beings by nature. But the other side of that, though, is, okay, is the issue really that we need to be in the same environment, or do we just need to get better? Do we need to upgrade our skill set and get better at communicating a message, in this case, via a medium like Zoom, right? What are your thoughts on that? I know you're going to have a unique perspective.
You're gonna get a lawyer answer, which is it depends, right?
No lawyer answer.
But hear me out.
Okay. All right.
It depends on what you're doing. I would say normal conversations, like even right now, approaching potentially new investors about making investment. I think last year you could have pulled that off if you had already known them, but not if they were brand new. Now, people are getting used to that. That's okay. But for example, when it comes to whiteboarding, I love whiteboarding. There is just not a great whiteboarding great, not a great way to virtually whiteboard right now. I know people are like experimenting with VR headsets and stuff like that, which is expensive.
I have one for you. I have one.
Oh, okay.
It's called Tribe. I was looking into this yesterday. It's called Tribe.
I'll look into it.
Oh, no, not Tribe. Vibe. I'm sorry. VIBE.
Oh, Vibe.
Yeah.
Okay.
Yeah. VIBE. Yeah. But so go ahead.
I will say, I have had to hire many people over the past couple months, and now the process is entirely virtual, and you have to onboard them virtually, right? So there's less team building there.
Right.
It's getting them into the team culture is a little bit harder. It's not impossible. It's just harder. But I will say, we're doing this because we have to, but in my ideal world, I would still just love to meet someone face to face for at least a final interview, because there is just something about someone's body language.
I agree with that.
Seeing their, it's hard to describe. It's just this intuitive feeling that you get about someone when you can actually see them, and it's harder to get that from a video conversation. But look, I agree, a lot can be done on Zoom, and I'm personally very happy because for the past couple of years I have had to basically live in hotels and on airplanes, and there's been weeks where I'm in 3 cities in 1 week because there's so many things to speak at. And now I don't have to do that, and to be perfectly honest, I'm really enjoying it.
No, that's great. That's really, really great. Well, I'm gonna pivot a little bit, okay, and start getting into some of the economics that we're experiencing today. Okay, so I love these conversations. I know you do as well. But before we do that, Amy, I know you put together syndications. Okay, and so you put together syndications for real estate. Also other ventures. Can you talk a little bit about the world of syndications from a legal standpoint, and talk about maybe 506B, 506C, A+, just explain that for our audience, and then we're going to get into once you walk us through that, we're going to talk about raising capital, okay? Using an offering. All right. So where would you like to start so you can guide us through this?
Sure. I mean, there's a lot of information about the fundamentals, the basics out there. So I don't want to go into that into great detail. Maybe the best way to explain it is, sometimes clients come to me and they're like, I want to do a 506C offering or whatever offering. And I think it's really helpful when people do actually read the regulations, but I also, I think I'm very much a business attorney, right? In the sense that you come to me, you tell me ideally in the best case scenario, what you would like to do, and I will help you translate that into, okay, you take this route or you take that route. We can go this strategy, but you gain this and you lose this, and vice versa, right? So, 506B is the most popular exemption there is for raising private capital in the U.S.
Right.
Probably in excess of 95% of private capital is raised under Rule 506B, and that's more than what is raised on the public markets, right? Public markets being NASDAQ, Dow Jones, that sort of thing. And the reason why
but a lot of the
is
companies that are participating in those raises, they're actually Fortune 1000 companies. So even though they're not going to, or they're not using the public markets to raise that capital, they're still Fortune 1000 companies for the most part, right?
Yes. I mean, Rule 506B is very interesting because it's very versatile and it can work for everyone from, the smallest deals to the hugest deals, right? The beauty about it is that there's very little friction. You can take up to 35 non-accredited investors. The rest of them have to be accredited. You don't have to go do a lot of lengthy verification. They check a box, right?
Self-verifying.
You can raise as much capital as you want. So, and then you don't have to ask the SEC for approval ahead of time. There's no mother may I, you tell them after the fact, right? You just have to make sure that you're fully disclosing everything. Sure. 506C is similar, but there's a lot more friction. And the reason there's friction is because people can advertise. And so when you're advertising and grandma and her last social security check hear you and she says, hey, this sounds pretty good, they want to make sure you're not getting those type of people investing. And so that's why they make it so that you cannot have any non-accredited investors. They have to all be accredited or basically rich, sure. Right? Rich according to the SEC. And you actually have to verify that they are accredited, which means they have to show you documents. Here's my IRA statement. Here are my pay stubs, right? And there's a lot more friction there. Some people feel very conscious, from a privacy perspective about sharing that information. And there are ways where, it doesn't totally have to be shared with the syndicator or the fundraiser. But, it is a lengthier process. Everything else, I think it tends to be much more of a, it's a more of a niche type of exemption, right? So Reg A Plus is what we call the mini IPO. You can raise up to $50 million from non-accredited investors, but it's a lengthy process. You got to go to the SEC. It's going to take minimum 4 to 6 months to get approved. And, the attorney fees will be potentially much higher. And so we usually counsel companies, don't use a Reg A Plus unless and until you're ready for it, right? It's very good in particular situations. On the exact opposite side is what we call Reg CF or regulation crowdfunding. That's more like the newbies, right? And currently under Reg CF, you do have to go to a online broker-dealer portal that's registered with FINRA. They will take a fee. You do have to file something in advance. You can only raise up to $1 million in change every 12 calendar months. However, the caveat is that the rule is potentially changing. Hasn't changed yet, but it should be changing soon. And they're about to raise the cap from 1 million every 12 months to 5 million every 12 months. And I think that will make a difference for beginning syndicators because you can take money from non-accredited investors.
Interesting. So I find that really interesting, right? That especially in this market, in markets like this, when we go through a cycle where we're in a recession, equity becomes even more important because banks tighten up and their LTVs go down. And so consequently, we need more equity to make acquisitions work, right?
Yeah.
So what are some of the things that you're seeing right now? Or maybe the better question is, what are you seeing some of your smarter investors do that you can share with our audience as it relates to syndications? What are some of the trends that you're seeing right now in the marketplace?
I think, savvier, experienced investors understand that when there's a lot of volatility, when there's a lot of confusion, and when there's, a huge impact on the market, like right now, there is also an opportunity to make a lot of money. I think people also have to remember that, the Fed is basically printing, $6-8 trillion. There's a lot of free money floating around, right? Which also means currency devaluation, which means my $1 I saved today, tomorrow is potentially worth more, like it has the buying power of 70 cents, right? And so I've been hearing about a lot of people wanting to put money into real estate because they're like, you know what, real estate is stable. It only ever really appreciates, generally. And, that's where I want to put my money. Because right now, if I'm putting in my savings account, my checking account, earning 1% interest, I'm really losing 20 to 30% value over the next year as devaluation hits. So I still think there is a lot of investment demand.
Sure.
Plus, rates are so low.
Yeah. Well, typically, and you bring up a good point, right? When you have this much money chasing after opportunity, right? It typically creates in the long term inflation. So I'm sure, for a lot of our listeners out there, we've seen the precious metal markets rally, right? So gold, silver, you get these crazy increases, 30, in some cases 40%.
U.S.
uptick,
Treasuries.
Right. And, I think a lot of that is driven by probably the assumption there that over the long term, as the Fed continues to dump all this money into the markets, that's going to drive inflation. So I do agree with you that I think you're going to have more money entering the real estate markets. That's going to be one of the reasons there's just going to be a lot of money pumped into the economy over the next couple of years, and $3 trillion is just a lot of cash to be injected, right? I mean, that's just an awful lot of investment. And so what are your it's just, it really is. I mean, it really is.
I think that's why the stock market is so high right now.
Yeah, no, I agree.
It's unreasonably high.
Yeah. So does that make you nervous?
No, I mean, well, I also do feel like, the younger generation of millennials, and technically I'm a millennial, I guess, they, I don't feel like a millennial, but I heard it's like, I think even my husband's a millennial. I think it's like anyone born after like 1975 or something like that. So it's wide range, but I do think that millennials tend to be much more speculative. Right. You see a lot of them attracted to apps like Robinhood. You're also seeing a lot of bad press about Robinhood because people don't understand the investments that they're making. Right. It's lots of turmoil these times. And, I've been expecting a correction in the real estate industry since 2016, and it hasn't happened. It's been 4 years I've been expecting this correction. So I think it's going to actually finally start happening, and I am personally thrilled about that because I'm like, finally, like I've been
good. No, I get it. I think there are, a lot of people out there who've been, working to position themselves for a time like this, right? So what are some of the economic trends right now that you're seeing in the multifamily space, or the opportunities rather?
Yeah. So it's interesting. Investors are definitely asking a lot of questions about, currently there's this eviction moratorium, right. And there's definitely a lot of questions about that. It's a more expansive and liberal policy in some states than others, right? And so it is making people rethink where they want to put their investments. But overall, I still think that the multifamily investing space is really strong. I think a lot of syndicators right now have been and are underwriting more cautiously, at least the more experienced ones. I'm sure there are a lot of deals done over the past couple of years that maybe weren't underwritten nearly as well, or were in like particular demographics, right? So right. I talked to one client a couple weeks ago, and they closed a Section 8 housing deal, and those tenants, like, they're pretty much all paying, but I'm hearing the Class Cs are really suffering because they're the ones who lost the restaurant jobs, things of that sort. So, we're just seeing a lot of shifts, but I think, change brings opportunity.
Of course. So here is a big question, okay? Where does Amy Wan place her investment dollars? That's always a tell-all, right?
Yeah. It's really interesting. When I was young, I put it in the stock market, and I lost a lot in 2008, 2009, and pretty much have not touched it until COVID started, right? Traditionally, I've always been so much more interested in private investments, alternative investments. So everything from, equity in multifamily to private private money lending, hard money lending, all the way to, invoice factoring for small businesses. I love alternative investments. And, I still think there is money to be made in the stock market, but I just don't think very much in the stock market makes sense right now. So it just makes me nervous because it feels like a Ponzi scheme. Like you want to be the first money in and the first money out before all the cards fall.
Yeah, well, it's great to hear kind of what you see as opportunity, right? Because I think it's one thing to talk about what you're syndicating, but it's also another to get your perspective on where you see the opportunity, especially when you're transacting a lot, right? When you're putting together a lot of syndications.
I'm very excited about real estate.
Yeah.
I'm very excited about real estate right now.
I think it just gives you a kind of a unique perspective, right? Not only how you place your own money and what you place that in, but also when you're seeing a lot of deals and you're putting together a lot of structures and a lot of private placements, I just think it gives you a very unique perspective. So for our real estate enthusiasts out there and our real estate investors out there, talk a little bit about, the company that you put together for syndications.
Yeah, I mean, it's been an interesting journey. So when I got involved in the real estate investment industry, I started off as general counsel of a real estate crowdfunding platform. It was one of the first ones back in the day. And we did, a ton of, we placed a ton of money there. I eventually left and basically became partner at a real estate syndication law firm. So that law firm, 80-90% of what we did was real estate syndication work. 80 to 90% of it was in multifamily, right? But I think because I come from a tech background and I've always been super interested in how technology can make us better at what we do. After I was there for a year, I kind of got to the point where I was like, I'm really disinterested in using the same old way, Microsoft Word, to write these fun documents every day the same way when so much of this, it doesn't have to be done by me. It can be automated. It can be maybe even, there's definitely a logic to a lot of it. And so I left and formed Bootstrap Legal. And, there, the whole idea is, you, the client, you will never know that we're using a lot of technology in the background because I don't expect my clients to be tech savvy. What I want is for them to have a great user experience, right? I've been general counsel. I've had to hire other lawyers, and you send a lawyer an email, and you don't get a response till 2 weeks later, and you're like, dude, everything's instantaneous now. Keep up with the times, right? And so the way we do things, it's very streamlined, and we use some automation on our end, but at the same time, a human attorney still goes through and manually makes changes because you can't automate everything, right? It's not worth it, and it's kind of not possible because every deal is different. And the great thing for the customer is they're getting their documents faster, cheaper, and more precisely than they would if they went through a more traditional firm, but they are still getting high touch, right? There's still an attorney for them to talk to ask questions to get some counseling from, to do gut checks with, because that is super important. Because if you have documents but you're not doing things the right way, there was no point in getting the documents. And a lot of people come to me and they're like, hey, how much does it cost to, write these documents? It's not about the documents. It's about the counseling. It's about forming that relationship with someone. The documents are it's a necessary evil to make sure that people don't get sued later on, right? So, I'm told by another real estate syndication attorney that we have the fastest turnaround time in the industry.
Oh, really?
When we get everything we need, we turn around a first draft in 3 business days. And most other firms, it takes them 2 weeks. So, when time is of the essence and you got to close, and you need, time to fundraise, which is, I think what is the case today, I think making sure that the law firm responds in a very timely manner is super important.
Yeah. No, that's really, really interesting. 3 days for the first draft. That's pretty good. So in essence, you're standardizing what you can standardize. However, the attorney-client interaction, you still make that a priority because there are just some things with transactions that need to be customized, right? Especially when you have agencies involved or agency lenders involved. So I think that's really great how you're taking syndications and you're using technology to create efficiencies and of course bring down cost, right?
And I just want to do a caveat. I wouldn't call it what we're doing standardization so much.
Sure.
What it is I basically had to sit down and take a lot of what's in my brain, all the logic in my brain, and translate that into code, right? And so we have like 800 to 900 different variables that are coded into our documents. So it's not like a template. It is like, if you choose this and that, this populates this way. If you choose this and that, it populates this way, right? So, so there's a lot of logic. And the interesting thing is, I think our company has really opened a new market. Like when I was working in private practice at the other law firm, I think maybe once the entire time I was there, I represented a sub $1 million, syndication because, like transaction fees are a real thing. And if you're only raising like 200,000, you're not going to pay $15,000 for legal documents, you know? So I think because we're able to bring down the price a little bit, I now get a lot of first-time syndicators where they're like, my first deal is kind of small. I'm only raising, 300,000, $500,000. And, for us, the pricing just makes a lot more sense for them.
And so what does that pricing look like? I mean, I know it probably varies, but just so that, we have some idea, right, for a $500,000 raise relative to a $2 million raise, what does that look like roughly?
Sure. So we charge based on however much the raise is. It is a flat fee, and it does not include any third-party fees. So, if we do your entity formation, whatever the cost of that is, we don't upcharge you, but we ask for reimbursement. And on the back end, the Blue Sky notice filing fees, we just ask for reimbursement. But for us, it's flat fee. It's all in. I hate people. I hate being nickeled and dimed, so I don't nickel and dime people. So basically for a sub $1 million raise, we're $8,500, and then every additional, couple million, we're an additional $2,500. Right. And the way I've crafted the experience is just I've made it so that we're serving clients in a way I would like to be served, because
I get it. And I think that's great. Right. So here's the thing, right? Inside of this space, capital is extremely important. And, being able to work with someone who not only understands the requirements associated with an offering, but who can actually give you counsel on things like structure, really important, right? But also helping you understand what the downside risk is and how to mitigate against some of that using, your documents, right? Especially the operating agreement. So, I'm gonna shift here just a little bit, okay? And I'm gonna talk about more of just where you see the opportunity right now, because you have kind of a unique advantage, right? You're working with a lot of different clients out there. You're seeing how people are putting deals together, where they're placing money. Where are you seeing a lot of the money being? I mean, let's stay within the world of multifamily, okay? But where do you see that money going? Like what states? Is it, for example, Texas, Kentucky, California? Where are you forming a lot of your offerings? Where is that money being directed to?
I think the trend right now is what has been the trend over the past several years, right? There's always been a lot of money in states like New York, California, Texas, Wyoming. That hasn't changed, although, rich people are starting to leave California. And I would say that a lot of that capital is flowing to places like Texas, places where people are sure that there will be jobs, right?
Right.
What I've seen over the past several years, not just the past several months, is that I find that the syndicators who do abnormally well, they tend to have a couple of different advantages. One is they have like a network of brokers who will bring them off-market deals or things that haven't even been listed yet, right? So like the public doesn't even get access to those deals. Two is that a lot of times, they tend to have a very unique business model. So, for example, I can think of one client who, I don't know if they're doing well right now because of the COVID-19 situation, but they would specifically do student housing for foreign students who could pay a premium because, it was harder, foreign students, it's not like their parents can like sign on the lease because their parents don't have a credit score, right? And so they end up paying a premium, and they offer, services specific to foreign students.
Sure.
Like, I'll pick you up from the airport. I'll drive you to go buy your first car. And they have been able in the past to get a crazy premium on that. So people who tend to have a very interesting, different business plan are the ones that I've seen do really well. And then, the third thing, which is the most basic thing, is conservative underwriting.
Yeah. So if I'm hearing you correctly, what you're saying is inside of this space, the operators that you see or the syndicators that you've seen that have been able to, I like the word that you used was abnormally successful, or was abnormally something?
Abnormally higher returns.
Abnormally higher returns. Okay, there you go. Yeah. So it sounds like, they're really syndicators that focus on a niche, right? Where they have a niche. They're not doing what everybody else is doing. They've kind of figured out where they can play really well. And they've created some mastery inside of that space. Okay. And they've really dialed that in. Is that kind of what I'm hearing?
Yeah, definitely.
Okay, cool. So, we're coming to the end of our show, and I just really want to thank you. You've been a tremendous guest. Do you have any questions for me, Amy, that you think can add, any value to our audience? And then I have a couple more questions for you, but any questions for me that you think can add any value to our audience before I transition back and ask you some more questions?
Yeah, I'd love to flip the question on you. Sure. My clients tell me what they tell me, but I know like there's always a lot of gossip and talk in the industry. Like, what are you hearing amongst the multifamily crowd?
In
what
terms
are people
of
doing?
What area though?
Well, I guess in terms of, activity, is it higher or lower? What's the sentiment? And then what markets are people concentrating on?
Right. So I think that's a great question. Okay. And what I'm seeing right now is literally the opinions are split right down the middle. 50% say, hey, it's a great time to buy. The other 50% are on hold. They're waiting. And, it's great, right? Because that means we have a market. That means that there's still a lot of indecision. And when you have, to your point earlier, when we have a lot of indecision, that means that there's still a lot of opportunity, right? When the crowd starts saying, hey, everybody, let's make a right, that's when, once you have a lot more clarity, then those opportunities start getting competed away much faster. So right now, inside of the space that we're in, literally the opinions from from all of my interactions are literally split down the middle, right? I mean, there's opposing opinions, which is great because that means that we have a market. Okay, if everybody thought the same, there would be no opportunity. So that's what I'm seeing right now in terms of, where I see money going into. I see a lot of money going into the Southeast. Okay, but I also see a lot of money, interestingly, still being diverted into high density markets like LA, San Diego, but for repositions, like, everybody's looking for something that maybe is being a little bit underutilized. Okay. Like, say you have a 4-unit apartment building that's sitting on some land that technically the zoning allows for, 40 units or 50 units. Right. And the idea then is to go in and they'll put in some type of mixed use product where they'll have retail on the bottom, units up top. It's in an up and coming area. And, the idea is to maximize monetize that piece of land further, right? Because it's currently being underutilized. I'm still seeing that, and I'm still in quite a bit of those conversations. I was just on the phone, with a developer, and we're talking through something. We were talking through something about an hour ago. So I still think that in high density markets we're going to have construction. But to my point about the contrasting opinions, I was on the phone with a buddy of mine yesterday, and he develops in San Diego. And so he had the opposing view. Very interesting, right? That they're pushing through everything that they have in their pipeline now that's in process, right? So they want to get it finished. No one wants to sit on incomplete product. And then the other side of that is he's saying that, once we get that through, right now we're just waiting. So isn't that interesting? Yeah. So opinions are split right down the middle. But again, I like that because that means that we still have a lot of opportunity because there's still a lot of indecision out there, right? And I call it a market. We have a market.
Yeah, exactly.
So hopefully that helps. Hopefully that was a satisfactory answer.
Definitely. It's always interesting to get everyone's opinions. And nowadays it seems like everyone it's always 50-50, right? On everything.
Right.
So
Right. But I'm really fascinated by the economics in this country, especially now that there's so much government influence, right? It makes things a little bit more interesting because when you're dealing with a pandemic and now you're dealing with, I don't want to use the word extreme influence, but it might even be a good word in this case because no one's kind of lived through a situation like this. And so, I think it's a very unique time to really position yourself for massive, massive opportunity. In fact, the way that I put it right now is we are getting ready to go through the largest transfer of wealth in the history of this country. For the very reasons that I mentioned earlier, right? When you have this many clashing views, that means that there's a lot of opportunity to be discovered because no one's in agreement. So you're going to have some investors that are very diligent and they're very active. Like when most people step on the brakes, they take off and they start using this time to their advantage to start figuring out where the opportunities are. So I think it's great. I think it's good. I think opposing opinions are really important for markets to function well. Hey, so I have a couple more questions for you. Okay, and then we're gonna wrap. Yeah. And then we're gonna wrap this up. You've had the opportunity to see a lot of different deals, to be in a lot of different opportunities, right? And one of the great things about transacting inside of business is it gives us the opportunity to grow as professionals through our successes and through our mistakes as well, right? So can you share one of your most successful investments? You don't have to share the name of the company, that, who your partners were and all that good stuff. But maybe just an overview of, hey, this is kind of what it looked like. Here's why it was successful. And this was the biggest lesson that I learned when I moved forward inside of this space or with this opportunity. And hey, it could even be one of your partners, one of your investors. But that's where the lessons happen, right? Is inside of our successes. And then the flip side of that, they also happen inside of our failures or inside of the challenges that we go through. So I'm going to start with your greatest success. Your greatest success story.
My family does real estate. We're not big time, but we do some real estate. And this deal is not done, but it's looking like it's going to be really, really good.
Nice.
I started off my real estate journey in private money, hard money lending. And so
Really?
a certain member of so I know both sides of the equation.
Wow, Amy, the hard money lender. I would have never guessed. I'm going to have to be nice. I'm going to have to be really, really nice to you.
So a certain member of my family made a second lien loan to a church in LA. And, how do I put this? We tried to really work with the property holder.
Right.
But ended up realizing that he was not very great at business.
Sure.
And so in the end, instead of having to foreclose on him, this certain family member, sorry, my dog's here. This certain family member just ended up asking him whether or not he wanted to be bought out, paid a bit of a premium so that they wouldn't have to go through the foreclosure process.
Sure.
And
That's all right. That's all right.
Sorry, you might have to edit that out. And so, and it was because, another property had just sold, so they needed something to 1031 into. And as it turned out, so the church had a homeless shelter. The homeless shelter had been running for 20-something years. We thought everything was permitted and licensed. Apparently it was not, because the minute
the look on your face when you said that.
The minute ownership changed, the agencies came in and shut it down. But this is also LA, where it's like affordable housing is a real crisis, right?
Of course.
And then we also realized it's an opportunity zone. And so, we're kind of in a place right now where it's like, oh, wow, like, what do we want to do with this? Do we want to bring it up to code and get the permitting and operate it as a homeless shelter, or, tear down everything, do affordable housing or something like that? So the story is yet to be told, but there's a lot of, it seems like this will have been a good deal.
So do you guys at this point control it? Have you take title to it, or are you still working through the process?
Yes, it's the property is under that family member's name. Yeah.
Okay, cool. Okay, so now we're gonna shift really quickly, and this is gonna be our last one. The greatest, I call them expensive seminars. The challenge one of the biggest challenges that you've seen, whether it be something that you work through an investment, or maybe one of your clients, I'm sure you've seen a lot of things not go as planned. And so what was that story in summary and the biggest takeaway, right? The biggest lesson learned?
Oh, man. Okay. I will say a lot of people are like, hey, I have a verbal commitment, like the deal is closed. I always tell people the deal is not closed until the ink is dry on the paper,
sure,
until the funds have been wired and they've been sitting in your account for 48 hours. Because if you did not know, like you can actually reverse a wire. It is possible.
No, I did not know that. I know you can reverse an ACH. I didn't know you can reverse a wire.
Yeah, well, if you call a bank up, and they can still do things within 48 hours. So what I will say is always make sure you're wiring to the correct person or entity. Call them up because there's a lot of wire fraud in this business. And
that might be important.
I would say enthusiasm is great, but be enthusiastic at the right point in the process.
Hey, I love it. Hey, well, I had so much fun, Amy, having you on. You're always just, full of energy. Just with your bio, I could see that. And you just have a great set of skill sets that you built over the years, not only in technology, in the legal world, but also dealing with people, right? Because at the end of the day, this is a people business, and you're always just great talking to you. Love the energy, and had a lot of fun with this conversation as well. So how do people get in touch with you, Amy, if they want to reach out, ask you a little bit more about your syndication practice, and also just your experiences in real estate in that space? What would be the best way for them to get in touch with you?
Sure. So the website for the business, the technology business, is bootstraplegal.com. They can just go there and they can book a consultation. The underlying law firm is called jobsactlawyer.com. And if people want to reach me, they can just email me. I'm Amy, AMY, at bootstraplegal.com or Amy at jobsactlawyer.com. Super simple.
Awesome. Hey, thank you so much. You've been a tremendous guest. I wish you continued success, and I cannot wait to have you on next time, which I hope will be soon.
Thank you so much for having me.
Yeah, you're very welcome. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.